All right, what's up, guys? I wanted to do this for you because I'm getting ready to get on my team call. I got 10 minutes, but I did want to do a real estate video today. This one, my next bunch of video series are going to stick to apartment buildings. I'm working on some apartment building stuff here in California, and this will help a few people because I'm going to be bringing a few people on board for that. And I got a webinar coming up. It'll be how to invest in apartment buildings and another webinar called How I Do It. So that way you get a specific understanding of how I do it. For a few people that are going to either be working with us or investing with us in Bell Capital. So today, though, I thought this was important because I was talking to somebody about this. And this was about, they were like, what market should I focus on or how should I know? And when I learned this a long time ago, I don't know if you guys know, but I used to be a coach for Dave Lindahl's office, real estate, real estate mentor and Apartment House Riches at some point. They changed the name. But anyways, the way that we always taught it and the way that I grew to understand it because it was easier, it was simple. I like things super simple, so I'll do that. So it was about market cycles and where you should be investing at in market cycles. But here's what I learned as being an active player, not just a coach. So typically, the market goes like this. It goes up, down, right? So the way that I'm sharing with you guys, I want to show you guys something. So from this perspective, let's say this is a buyer's market 1. This is buyer's market 2. This is seller's market 1, right? That's a 1. This is a seller's market 2, right? So basically what happens is in any market there's absorption, expansion, and decline, right? So absorb, expand, and then a decline. All real estate markets do this, and each state and city has its own little weird heartbeat, right? And that's kind of how this is. If you want to look at this like a heartbeat, it's like bum 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 bum, like right? Because I like to explain stuff with sound effects. So in a buyer's market phase 1, typically in this situation you have, and I wrote it down. So we have rents are falling, unemployments are high. This could be any market. And right now, just because the news says, unemployment's, like the lowest it's ever been, someplace in some city in the United States, jobs are harder to come by, whether the population isn't growing, whether there's not new businesses moving into this place and people already are occupied in the business or in companies or whatever, so they're not doing a lot of hiring or it's hard to get hired. People are leaving that place because of it, because they can't afford to pay rent, so they move out of those places. So there's a bunch of other stuff going on. So inside of a buyer's market phase 1, if you're going to be looking at this to buy apartment complexes, multifamily apartment buildings, you want to look at this one as a buy and hold, situation, right? Or a fix and flip, right? So you're going to get into an apartment building and you're going to fix it up a little bit and then you're going to sell it for below market. That would be the strategy, because you got to have a strategy. At no point at all should you not be buying inside of, especially in your own backyard, and I'll explain that. Because here, let me show you something before I go into the next strategy in the buyer's market phase 2. Apartment buildings across, I think over the last 50 years, are doing this. So it doesn't matter what the apartments are doing. At some point, it's still going up. So whether you're buying at a buyer's market phase 1, 2, seller's market phase 1 or 2, it's here. And then at the next phase of the increase in apartment and growth, right? Because there's more people in the United States right now. People need housing. People aren't all buying homes. Rents are increasing. These things are happening. So at some point, real estate, apartment buildings itself is going up along this cycle. So this cycle is constantly cycling, but it's all going up. So no matter what's happening. So you have to always be buying in every phase of the market, and there's a strategy for each one. So this one, in your buyer's market phase 1, where employment's low, unemployment's high, rents are falling, and you want to be able to fix and flip. You want to be able to find them, negotiate a good price on them, and then fix them up, and then turn around and sell them for below market price. Or you want to buy and hold. So you want to buy them, and then go ahead on and hold them. Make sure that you're buying them at current rents, because if rents are falling, you don't know how far it's going to go, so you need to have a buffer there. So buyer's market phase 2, right? So in this market, same thing. You want to be able to buy and hold. So employment is now a little bit more stable, or it's going up. Prices are a little bit more stable so far as rents and houses, and it's just stable. It's where it is, but it's going up just a little bit. Remember, it's either growing or it's dying. It's going forward or it's going backwards. So even though something is stable, there's a slow incline going up, which is why this is going this way. I'm going to draw some arrows so you can see where things are headed. So it's going like that. So this is the buyer's market phase 2. You want to buy and hold for cash flow, and you can buy and flip in this market too. But your buy and flip time is going to take a little bit longer because people are starting to buy stuff. It's a slow growth, but not everybody's running to this market. The buyer's market phase 2 is a 3 to 5 year hold. So just look to expect to buy something at 3 to 5 years. Here's why. If you're going to do seller financing, depending on the timeline that they have on their loan, you're going to have to play there. Or if you're bringing in new financing into a new market, you're going to go for short-term financing, 3 to 5 years. That's going to be your best play. So buy and hold or find and flip. But my suggestion in the buyer's phase 2, this is your cash flow markets, right? These are cash flow markets. That's where you make your biggest cash flow. Now, when you seller's market phase 1, right, you're going to have lower cap rates on the cap rates are lowering on C-class properties. We're seeing that everywhere, right? C-class properties you wouldn't even duck at right before. You'd be like, wait. Now the cap rates are lowering. They're 7s, and it's supposed to be before. They were like 10s and 12s. So you have lower cap rate. You got lower supply in your seller's market phase 1. Rents are going up. In this situation, it's the same thing. You're going to buy and hold, right? You're going to buy and hold in here. If you're going to do any flips in here, this is where your big rehabs come in. Big rehabs, right? These are your reposition deals. If you don't know what a reposition is, basically that's you're going to buy something and you're going to turn it around. Maybe it's been vacant for a little bit, has higher vacancies than normal, and you're going to buy it, fix it up, do the paint, do the parking lots, do the landscaping, add in amenities. You're going to take these bigger sites and you're going to turn them around and you maybe change the names, whatever. You're going to reposition these things because people are now moving. This is a seller's market phase 1, or the seller's market phase 1. And then in your seller's market phase 2, this is your condo market, right? This is your condo conversion market. As you guys can tell, if you just think about what market you're in currently right now, if you look around your own city, you can see where you're at. This is the condo market. So even in this one is your back door. This is your back door or your backyard market. Like, you need to be shopping in your own backyard. Like, you need to buy in each one of these phases because each one of these things make money. But in this one, let's say you can get a deal and you can buy and hold, right? Cap rates are going to be higher. Unemployment is at its lowest. What else we have here? Job growth is starting to slow down. Prices are higher. Time on the market for apartment buildings are getting extended. Like, so before in this market, people were putting deals on the market. They're just flying off the shelves, right? Cap rates are coming down. In this one, things start to slow down. Cap rates start to raise a little bit. It started to increase. Time on the market increase. In this one, it's your buy and hold in your backyard because if you can find a good deal here, hold on to that deal. Yes, at some point, it is going to come down a bit. These are harder. It's harder to play in this deal. All your big players are out buying stuff. They've been buying stuff here. They're refinancing stuff, and they're starting to buy the A-class properties. So this thing, you have to remember, it isn't about not buying. It's about knowing the strategy to buy, which is why I say if you're can you guys see this? Yeah. If you buy based on situation, if you're a situational buyer like I am, then you're not out running around looking for all these deals that are on the market. You're looking for off-market deals from owners who may be in a distressed situation. Maybe they have high vacancies, high evictions. Maybe they don't have the money to renovate. Maybe they've had this property for a long time. Or maybe somebody just bought a property in this phase and they weren't really apartment building players. They got into it to say, oh, I'm going to hold this thing for 3 years. And it turned into a nightmare because they didn't realize that in this phase, you have to actually have some experience, right? And I'm not talking about if you're just coming from the residential side of the world where you fix properties and bust the things down to the studs. Apartment building players, you're a different animal. So I said all that to say, look, in absorption phase, like this is the absorption phases right here, right? So no matter what, this starts to absorb, this right here starts to absorb stuff, and it's beginning to expand, and then all of a sudden you're in the decline all over again, where you're circling back and around. because it just goes like this the whole time. Bam, bam. And as you can tell, like I said, the apartment buildings, this line is continuing to go up because people are still wanting to rent. People are still not buying homes. People are getting older. Younger people are getting older, so they're moving into apartments. So in each phase of every market, there's going to be some type of growth that I want you guys to see. So if you're a situational buyer, like I said, then this makes sense because it isn't about you not buying. It's about you understanding what situation's happening so you can maximize on that situation. You can say, look, I know at this time in the market, owners are experiencing this. If they don't have if they don't have rents and vacancies are all over the place, then maybe I can fix that by more aggressive marketing, taking a good stance, doing some seller financing with this guy, maybe negotiating a better deal. Maybe they have some renovation that they've been putting off for a while, and now they don't have the money set aside for it. And you can raise the money, go negotiate with the owner, and put together some type of seller finance situation, a partnership, get added to the LLC, pay this guy some money, turn the property around, and then turn around and refinance the property based on what you did and now being an owner, because you're not in acquisition, you're in refinance mode. And let's say you can raise the rents a little bit. It doesn't matter, but you got to get in the game. If at any point you miss the mark on this, because this is happening no matter what, boom, and then it comes down, it's going to keep going. You need to be looking at this line all the time. That is going to save you as a real estate investor. You got to play this game. So any way I can help you out, let me know. Remember, this is buyer's market 1, buyers 2, sellers 1, sellers 2, and then it starts all over again, right? Buyers 1, buyers 2, sellers 1, sellers 2. So just understand that at every phase of the market, you are supposed to be playing this game. If you don't buy, you die. Your business is dead. Your income is dead. Your cash flow is dead. Everything. You just need to understand where you need to play. So I hope this helps you guys as it relates to phases of the market, where you need to be buying, the absorption, expansion, and decline phase. Buyer's market 1, buyer's market 2, seller's market 1, seller's market 2, and the strategy you're actually supposed to use inside of them. I'll be honest with you, they're all either buy, hold, or find and flip for a little bit less, so you can constantly keep your money circulating. But the name of this game is cash flow. So whatever you buy and you flip, take that money, buy something else, so that way you can make that money produce for you and grow some cash flow so you can continue to play in every one of these markets. All right, man, I hope that helps you guys. Hit me up if you need anything. Like, share, comment this video if you need it. I got to jump on my call. But I appreciate you guys. Anything you need, let me know. And we are going to be doing that webinar. It's going to be a full training. I'm not going to hold back. I'm not going to be teaching anything stupid to try to get you on this thing and then not actually help you. Go out there so you can be effective. I'm bringing people on for acquisition specialists on my team for looking for apartment buildings. If you don't want to do it on your own, you want to join my team here in Cali, and you live in Cali, let's talk. Yeah, let's go from there, man. I appreciate you guys. I love you. Let me know if you need anything to your success. Go get it.